Good afternoon, everyone. And today's topic is on cross-border payments and remittances in a digital-first world. And as we all know, India, in the context of domestic payments, has revolutionized how payments work through UPI, which has seen drastic growth, in the last 10 years, and even in the recent past as well. But however, when it comes to cross-border payments, there's still a lot of innovation, a lot of liberalization in terms of how things work today, which needs to kind of really come out. And I think in today's session we'll be kind of discussing various aspects and nuances in terms of various areas within cross-border payments which need innovation and which need changes. Within cross-border payments, there are specific segments in terms of B2B payments as well as retail payments as well. And maybe we'll start with Aman first in terms of the context of increasing global trade and India's role in terms of increasing trade, specifically in the context of B2B payments. What are the key trends and developments we can expect from a cross-border payment standpoint?
Yeah, thank you, Prashanth. Good morning to everyone. I think it's a pleasure to be here and part of this panel along with my esteemed friends and colleagues. We've all worked together in some form or shape, but today we're coming together again for this session. I think trade flows is a humongous business globally, right? It's about a $33 trillion business globally. And if you break it up into goods, merchandise, and service, it's about 26 trillion for goods and about 7 trillion for services. But services is growing a lot more faster than the goods. Obviously, we know because of the geopolitical tensions and US-China relations, and so that's what is actually kind of slowing down the global trade right now. And with Trump's coming in on 20th and with tariffs looming, I'm sure it's going to impact a lot more. But anyways, having said that, the show has to go on. The flows will continue to happen. And India being India, we've in the last rolling 12 months up to December, we've done about $1,800 billion of trade, both merchandise and service. This does not include about $30 billion of inward remittances which has come to India, and about $31 billion which have remittances gone out of India. So roughly about another $200 billion. So about $2,000 billion of trade happens in India. And it's a huge, huge opportunity, obviously. And obviously with the government's focus on manufacturing is going to go up, right? But having said that, SME, which forms the backbone of the entire global trade, we contribute to about 48% of our exports through SMEs, is where the pain points actually come up, right? A lot of innovation needs to happen on that side. A lot of focus needs to be given on helping the SMEs bridge that gap, because SMEs also don't understand the nuances of some of the global transactions, right? Because they are getting into it for the first time. And it's not only up to financial institutions, but also on the government, the fintech partners, the financial institutions all together have to come together, because this is a business very highly regulated, right? Whether it is in India or globally. Every transaction that you do, which involves 2 or 3 countries in a transaction, have their own rules and regulations, right? They have their own regulatory frameworks. And every transaction that you do has to ensure that you abide by those rules. Any transaction that you do with a US, obviously US dollar is the reserve currency, and you end up doing about 90% of transactions with US dollar. You have to ensure you are compliant with OFAC sanctions, right? So many customers don't understand. No, we've been getting requests. I'm sure a lot of other bankers who are here would be getting requests for doing transactions in Iran, Russia. So these are the things which keep coming up, but you have to at the end of the day ensure you are compliant with US sanctions. That is one part of it. Globally, the trade agreements which are happening, right, which is basically right now bilateral. India is doing only bilateral trade agreements. They're not getting into multilateral trade agreements, which could be the way forward for India to grow. But even then, even though in those trade agreements, the domestic payments that India has, which is UPI, linked with your platform like SWIFT, can help you grow these businesses, right? Cross-border transactions last year, if I look at through UPI, grew by about 150%. The credit card payments, the wallet payments, and the cross-border payments combined led up to about $1.5 billion every month, which means things are happening, things are moving in the right direction. It's only about creating an enabling framework, enabling ecosystem, which can only happen if all the stakeholders come together. So when you look at a trade transaction, the stakeholders involved are, as I mentioned, the government, obviously, the regulator. But apart from that, you have shipping companies also. When you do a cross-border transaction, you have a bill of lading, shipping bill, right, which needs to be which is still very, very paper-based, right? Till the time we don't make it digital, right? There'll always be issues in terms of time overruns, issues in terms of liquidity constraint, and issues in terms of higher cost, because the moment you don't get money quickly, your cost of doing business goes up, right? So e-bill of lading is very, very important aspect of helping the global trade grow and do it seamlessly. For that, UN has come up with a lot of laws on that, which some countries are adopting, some countries are still working on it. But in India, we'll have to actually start working on it quickly, because the moment your e-bill of lading is there, 40% of transactions will be taken care of, and that will help you release a lot of pent-up money in the system. Your liquidity constraints will get, to large extent, get resolved. So that's the thing that we really need to work on, and it's not only as a bank, but as an entire ecosystem will have to deliver on that. Thank you.
Thanks, Aman. So, Nikita, in today's day and age, in the digital world, you have a lot of buzzwords around artificial intelligence, blockchain, and new age technologies which are, coming into play in various sectors. In the context of cross-border payments, what are the key trends, from a technological standpoint, that you are seeing, which actually, will help increase and improve cross-border payments and remittances from India?
Thanks, Prashanth, and a warm welcome to everyone. It's a great opportunity to be a part of this esteemed panel. Like Aman mentioned, cross-border payments are a key economic driver for the country. India is the largest market in the world for inward remittances, and outward remittances are also growing steadily. This growth is fueled by the rise in e-commerce as well as the participation of SMEs in global trade. One of the key themes that I see in this fast evolving cross-border ecosystem in India is digitization, right? I think banks, fintech players, payment service providers are all increasingly partnering to come up with solutions that can offer an integrated cross-border payment experience, reduced costs, increased transparency, all of which today are priorities for G20 countries as well. So I think the ecosystem is aligned with the larger strategy of digitization. Another theme that resonates not only with India, but also I think with all the other global economies is the need or the emphasis to have standardized protocols as well as interoperability between different payment systems, networks, both in India as well as globally. I think the API harmonization initiative, including adoption of ISO 20022 standards, is a very important step, and that the ecosystem is working on to ensure that the friction in the cross-border payment process is reduced, right? Whether it is for retail or for B2B payments. UPI, of course, we all know the paradigm shift it has brought about in the domestic payments. But the international expansion of UPI involving linking the UPI payment rails with the real-time payment systems of countries like Singapore, Thailand, as well as the active participation of RBI and other central banks in global initiatives like Project Nexus, which is creating a multilateral real-time cross-border payment system, I think will go a long way in pushing real-time cross-border payments, making the cross-border payment experience as seamless as what today we enjoy in the domestic payments space. And this will not only, I think, give a fillip to digitization, but also drive the financial inclusion agenda that most of the emerging economies, including India, has, right? So that's a key theme. You mentioned blockchain, distributed ledger. I think they are no longer just words. I think the entire ecosystem is actively working on using them to increase security of cross-border payments, right? We have to people working on confirmation of payee, beneficiary validation, so that the trust in the cross-border payment system increases. You can have real-time settlement. You can reduce the reliance on payment intermediaries. So overall, I think these trends are all pointing to a lot of positive potential. And I think we are looking at India's cross-border payment system becoming more efficient, more inclusive, and more technology driven. So these are the trends that I can think of. Yeah.
Thanks, Nikita. Uh, Because one of the challenges, which ecosystem participants and customers, when it comes to cross-border payments, is the high cost of, infrastructure in the ecosystem, and to kind of, increase, the payments issue, because at the end of the day, cross-border payments is the backbone of global trade, and so how do you think businesses can, reduce cost in the long term and improve the infrastructure as well?
Thanks, Prashanth. Thanks for having me here. I'll heavily borrow from what Nikita just now mentioned. So we need to see cost from multiple facets. One is there's a perception that cross-border cost is very high, and I will say squarely that a lot of this is created hype also. See, cross-border costing used to be 2 to 3%, maybe 4% also in the earlier days. Now, in the days of media being so alert and social media is being there also, so any kind of a cost dissonance or any kind of a margin dissonance is rightly pointed out. You have every day tracker running on a CNBCs or a XC.com to the world, giving the right rates to customer also. So from the earlier days, the costing used to be about 3 or 4%. It is down to sub 1%. It is because of the competition which is in the market. And market which Aman was mentioning about, market has grown many-fold over the years. So what banks have done over the period of time is, one, because of volume growth, it has subsidized to a large part the fixed cost of the banks also, or the process part also. Second is, market has become more challenging, more banks have joined the fray, banks have become more efficient, it has anyways put a pressure on the margins. And thanks to a lot of fintechs like Revolut, wherein we have seen this kind of competition emerging. I think today, Indian banks, if I can restrict my comments to that, they are very well competitive when it compares to fintechs. Now coming to second aspects of it. Where does the cost come from? One is squarely about the margin, conversion margins on the remittances, whether it's inward or outward. Then the correspondent bank charges. Now what Indian banks and we at IndusInd are doing over the years is digitize the process so that handoff is reduced. Customer gets the remittances inward or outward done the same day. My costs comes down because no more handoff, no more multiple layers of people handling a transaction. It is handled digitally. The risk controls have become digital, checks and balances have become digital. So it has reduced our own operation cost as well. So earlier times when 5 guys were handling a remittance, today it is not even a 1 person. That is one process part. Second is, from a technology standpoint, the availability of system and the infra cost has come down over the years. And third is, now the banks have got a direct RMAs with a lot of overseas banks. So no more multiple routing of the transaction going into different countries. If today I have to make a payment to say Algeria, I mean, I don't know how many people have dealt with Algeria. Earlier, not a single bank used to have a tie-up with Algeria. Today, 3 banks in India have a tie-up with Algeria. So earlier transaction used to cost you 2%, now it is less than 0.5. So it is changing with time, and of course the new technology around the ripple effect, which is a ripple coming in, or the bitcoins coming in. Of course, India, it is still not legal that way. But I'm sure as the blockchain becomes a reality, and a couple of transactions we have also done, and I'm sure my colleagues have handled in their own banks. Those are also bringing down the cost, because now there's no more core bank also. So as we see the future, I see volume going at least 2 to 3 times, as government is also talking about the India exports imports. going up at 20-25% YOY. So we see market becoming at least double in next 3 years. Naturally, with the advent of new technologies around blockchain, we can see costing coming down. And as an ecosystem, all will gain. We will gain as a bank, fintechs will gain as a technology partner, and customer will gain because of two factors, costing and convenience. So end of it, it will add value to all the participants. Nobody will lose. That's what I had in mind.
Okay.
Thanks.
Thanks, Vikas. Interesting thoughts there. Moving to Girish, in the context of, cross-border payments in the retail segment, what do you think, how do you think businesses can innovate to provide a digital-first solution and ensure customers have a seamless experience when it comes to retail payments?
So I'll give you what our context is. I think at Revolut we are fairly well known in the remittance and the cross-border money movement space. And over the past few months and a year, we've been deeply studying how is this product bought, sold, and what is the customer behavior in the Indian context. If you look at cross-border transactions in the retail space, they are high value, mostly non-discretionary, which means you have to send it for some purpose, and complex from an understanding perspective that a layman most of the time does not even understand what the process is. Somebody is probably just helping them out fill those forms. Even the forms are actually filled by somebody else. Like if you look at the way the business happens in the offline world, majority of the times the form for the transaction is actually filled by the agent or the salesperson or something like that. So complex to understand product. Now, when you look at digitizing this kind of a situation, the first problem to solve is of transparency and trust, which is significantly different from how domestic payments have been digitized. Domestic payments have digitized more on convenience, right? Being able to not carry cash and just do UPI or QR code. But in the cross-border situation, our focus, first of all, is on ensuring trust and transparency so that you first understand the product, how it is being done, what are the details you need to provide, can we simplify the product so that you need to provide lesser amount of details and so on and so forth. So just make the product easy to understand. Second, be able to demonstrate that as a fintech, we are a trustable player, which means we are able to communicate that we have security measures, fraud prevention measures, your money will not end up in the wrong account. Like honestly, the biggest fear is, what if my money ends up in the wrong account? Who will I reach out to? And that's why I don't want to try with a digital player. So how do we stop that? How do we give customer support, reach outs, and so on and so forth? Transparency, just ensuring or communicating that your money has reached this place. Like it's here, it's 1 day away from reaching, it's 6 hours away from reaching at times, and so on and so forth. So first solve for this problem, then comes the value problem. The value problem, I think we've spoken about a lot, is on cost and time. Cost is on a declining scale as such, as sir mentioned. It is reducing. Fintech players will be able to reduce it a little more because they will basically bring in the efficiency of digitization even more. But cost is on a declining scale as such. And what we have seen is that because these are non-discretionary transactions, basically the curve on cost versus intent to purchase is not that steep, which means if there is a slightly higher cost also, but you trust the player, you will probably still go with them. The next is time. Time is also something which is critical for certain use cases. For example, if you look at personal remittances, like your child has to pay rent to their landlord in London and that's due tomorrow, so you need to send it immediately. Time is another area where we are very particular in ensuring two things. One, communicating clearly when it will reach so that the customer is always aware, and making sure that we hit that communication. So we have seen that in the e-commerce ecosystem, making sure that you have accurate delivery timelines actually leads to a much better customer experience. And then the next step to that is reducing those timelines. So first is making sure we give the exact date, your money will reach on this date, and it reaches there 100% of the time. And the next is saying that, look, it's going to reach at the same day, or it's going to reach on the next day, and so on and so forth. So cost and time. And the last thing in this situation is convenience. Now, inherently, cross-border, because of the regulations of the land, will never be as convenient as domestic. We are cutting steps down. Banks are also working to cut steps down. but it will never be as convenient as domestic, at least in the current regulation. Now, if that changes in the future, it might, but it will not be. So convenience is a factor, but because the frequency of transaction is lower, it's generally on the lower end versus domestic payments where you're making 10 payments a day, you're probably making 1 a quarter on an average, even lesser than that. So for that, so convenience comes a little later. And that's how we are thinking of building out our products and services to kind of improve digitization for this entire category of products overall.
Very interesting, Girish. Moving to Indunath, in the context of B2B payments, government is really kind of pushing e-commerce in India, pushing Indian exporters, including SMEs, to really ramp up, increase trade, increase exports. But one of the key bottlenecks which exporters in India face today is understanding and navigating through the to ensuring how payments are received and various issues around payments. So how do you think businesses can solve this? What are the key challenges and what are the solutions which can be provided here?
Thanks Prashanth, and thanks to the organizers for inviting me to this panel. So at BRISKPE, we offer the cross-border payment solution for businesses. So as Girish mentioned, they work with retail remittances, we work with the business payment. When we started 3 years back, one of the critical aspect was that how do we solve it? So if you look at the high-level figures, some of which Aman mentioned, Nikita mentioned, we are looking at last year we were exporting around $750 billion of exports across goods and services. Government aims to take it to $2 trillion by end of 2030. Within that, if we see e-commerce export is less than $30 billion today. And if we look at the government's projection, government wants to take it to, last year I think there was a statement from Commerce Minister Mr. Piyush Goyal that they want to take it to $300 billion in 7 years. Now this 10 times growth that is gonna come, there will not be new sellers who will be suddenly appearing in the market. There are a lot of economic changes that are happening from China or nearby geographies, wherein the benefits of such geographies is coming to India, that India can grow these exports. What remains one of the major challenge or bottleneck for such segment is the ticket size of the transaction, wherein cost becomes very critical. Apart from ticket size, it also becomes important that how compliances are taken care of. So I'll just take a small example. There is a D2C website or there is say Amazon Marketplace. These are the two known modes today. And on Amazon, typically you can collect in your existing bank account today, but there are other payment service providers which are helping collect locally in overseas geography, in overseas currencies. So Amazon is listing a lot of new payment system players on their portal, but again it is dependent on such marketplace. Now today we have Walmart, Amazon, such large marketplaces, and others are, many of us don't know if there are other marketplaces. If there are other marketplaces like Alibaba and all, they do not facilitate payment because they don't want to get into that segment. Why? Because again, the compliance becomes a major challenge, how the payment should be collected. Now, if you look at the banking system, the banks, the way solutions are developed, it is developed for all the industries as a whole. What fintechs are doing is picking up a very minute subsegment and trying to solve for that. Now, two examples that I mentioned, marketplace and website sell. These two we are all aware. So PG growth was predominantly fueled by a use case wherein small value transactions and instant checkout experience has to be there. Can a push transfer, like account to account transfer, wherein I add beneficiary's account number in my bank account and do a push transfer, be a seamless experience for the user? No. So that's where PG growth came in, that okay, instant card checkout experience can be built in. Now the same thing, if we look from the cross-border payment perspective, the same checkout experience is not good enough for an e-commerce player. So if I'm an SME seller, say in India today only, and I want to sell overseas, a buyer, say from Europe or UK, will come, make the payment, and add the address of the person who is going to receive the goods. The payment might be done using wife's credit card. So the screening that is done by that payment system player is done on wife's name, whose card is it, and which geography is it. But ultimately the buyer details might be husband's name, which is not identified by a payment player at that point of time. When they get into trouble is actually a time when they have shipped the good, delivery has happened, now they are lodging the bill for regularization on the RBI portal, and there is a hit against the, say, husband's name, sanction hit. Now in such transaction, you can't go for disambiguation, which are there for large corporates and all. So they get stuck. So what remains critical, that how we are solving for it. So BRISKPE is working with a lot of D2C players as on date, wherein apart from payment, we are asking for such real-time informations before the goods are dispatched from India. One is to avoid such issues subsequently. Second, if there are incremental requirements before the goods left the shores of India, you get these details. Third, even if it has left, see, in normal parlance, while government and as in normal market scenario, government is working in creating a export as a logistics hub, wherein returns could be simplified. Again, guidelines are not in final stage, but Ministry of Commerce is working, everybody is working. These regulations will come in, but as a payment system player, what can we do? Now, we are seeing WhatsApp-based commerce, Instagram-based sales. So these are new models which are developing. Again, banks, tech team, and their internal processes are such that adapting to such new age requirements at such small scale is not feasible. That's where fintechs and banks are working together to curate and create a solution that, okay, this segment is emerging. Let's work on a solution which takes care of the regulation as well as the SME's requirement. An interesting data that came up from a study that DBS had done in 2022. Across APAC, post-COVID, 44% of the SMEs are looking at setting up their own web commerce front. That is going to give a lot of growth from where this e-commerce growth will be fueled. So coming back to the original question, what an e-commerce company or maybe e-commerce business should look into is that payment service provider is not just collecting and settling the money. They have a larger role to play. How are they connected with the bank? How are they facilitating the subsequent compliances which are required to be fulfilled by them, because the ultimate responsibility is on them. So if you work with a foreign player which does not have a domestic presence also, payment settle ho gaya, then you look at the compliance. So that way it is not gonna help anybody. And somewhere regulator is also coming up with new guideline where they are binding the PSPs to enhance and work more closely with the banks so that regularization and compliance aspects can be taken care of.
Yeah. Yeah, I think it's a very complex problem, Indunath, which needs to be solved. So I think, around 4 years back, at the G20 had set a roadmap, for enhancing cross-border payments by 2027. And the intent or objective was to kind of make cross-border payments cheap, accessible, transparent. I think they had also specifically said that the idea is to ensure that by 2027, the cross-border payment reaches the beneficiary's account within 1 hour of the remittance being done. Now, obviously, I think we are a long way to go there. But Aman, in terms of achieving that objective, what do you think India should really focus on? How can we kind of really improve partnership between the public sector and private participants, and really make that goal a reality?
Yeah, I think so. I heard, we heard everybody, and I think everybody had a very relevant and important points to make. As I mentioned earlier, for the cross-border transactions to actually become seamless and again, at the cost of repeating is in terms of cost consciousness, When it is B2B, right, at that point in time, cost conscious is not only about doing transactions, it's also about the availability of finance to the customers, right? Today, when you do a cross-border transaction, a lot of customers can't do it because they don't have finance available, and especially on the SME side, right? The roughly, as I mentioned, about $33 trillion of global trade, 10% of that is the actually financing gap globally right now. And if you look at that number, number is huge. If that kind of a gap is there, the businesses can't really grow. And the only way it can happen is, the speed with which we can do business, the speed with which documents can flow, and the speed with which the payments come in, right? All of us mentioned about how everybody is working, in their own space in terms of reducing the cost, ensuring compliances, ensuring transparency, ensuring that fraud is detected at the same time. Because, especially in India, it is highly regulated. FEMA is the mother of all the transactions that you do. You have to ensure that you don't go beyond that, right? As of now, especially on the current account transactions. Capital account, obviously, there is huge this thing in terms of compliances to be done. But today, if you look at a simple trade transaction, there are about 30 touch points for a single transaction you want to look at. You have a buyer, his logistics partner, his CHA, the shipper, his CHA, then the logistic partner, and the multiple players that are there in the market, right? So, and each transaction has about 50 documents because it's still very paper intensive. The only way we can do it is to ensure it is paperless, seamless, and we can do probably people said about a DLT or a blockchain. Obviously, it's going to work, but it's still some time away in terms of the acceptability and the awareness. So that is what actually needs to be done together as an ecosystem for things to grow.
Thanks, Aman. Nikita, one of the key drivers for change is regulations and policy aiding the growth of cross-border payments and helping us achieve this goal of enhancing cross-border payments overall. And in the Indian ecosystem, we have seen earlier you had OPGSP framework, you had collection agents. Around more than a year ago, RBI came up with the cross-border payment aggregator framework. I think with respect to even import and export regulations, the government, RBI is proposing to change and liberalize the framework as well. So what do you think, is the trend now? Are things going in the right direction in terms of the regulations kind of facilitating and allowing the ecosystem participants to actually innovate and improve trade-related payments?
So thanks, Prashanth. So if we look at RBI and I think other regulatory bodies, I think they are asked as fast-paced as some of us payment players or banks or fintechs, right? And they keep all the ecosystem participants on their toes. I mean, we are preparing for a panel, and yesterday RBI has released several regulations on exporters, ability to open foreign currency accounts. They have made changes of allowing foreign currency accounts by exporters in gift city, etc. Right? So it's a constant evolving space, and I think there is an active effort within India to create a regulatory framework that is conducive for innovation, conducive for making cross-border payments seamless, right? I think you referred to PACB, and I think Indunath referred to some of the challenges that e-commerce players face, and I think the PACB regulation is an example of a policy intervention to bring out more standardization, more transparency in the e-commerce space. And at JP Morgan, being a global bank, we have a visibility of many regulators and how they are looking at this space. And I feel in that context, I think RBI regulations are quite prescriptive. So maybe we feel it as a challenge for implementation, but in the long term, they are very clear, right? So you don't get surprises. So as banks, it's easy for us to advise our clients, whether they are corporates or whether they are fintech players, on solutions that we know will be sustainable in the long run, both from regulatory perspective, but more important, I think the focus is to protect the end consumer, right? And I think that's where I think RBI is doing a lot in the right direction. you refer to the new import-export draft regulations that were released last year. Again, I think there it's a part of the overall push to improve the ease of doing business, right? And the underlying spirit of that draft regulation, when you speak to RBI, is that they are trying to take a back step in the procedural formalities. They are trying to empower AD banks in India to take calls on the procedural formalities related to foreign exchange, right? I mean, just an example, instead of a prescribed timeline of 6 months for imports or exports, they are now allowing the due date to be tracked as per the contract between the buyer and the seller, which is giving more flexibility to everybody in the ecosystem. So I think that will definitely help liberalize some of the foreign exchange processes that we have in India. I think India is also doing a lot of active participation with other international organizations like Financial Action Task Force, FATF, of Bureau of Indian Standards, to work on overall interoperability. And that's a key theme, I feel, because ultimately cross-border payments is about connecting every country together, right? So if international trade has to grow, that's an important initiative that is very necessary. So overall, I think to boost trade finance, simplifying documents, reducing cost, encouraging use of digital trade finance platforms. I think while payments is quite digitized, trade finance still has a lot of potential to have digital platforms, and also any support that is given to international expansion of payment systems will definitely go a long way in making our ecosystem more robust and more growth driven. Yeah.
Thanks, Nikita. Because with increasing focus, on digitization and, liberalized kind of policies coming in, one of the key challenges, is how to mitigate fraud, how to mitigate money laundering risks, for financial institutions generally. And I think that's, again, a very key problem which needs to be addressed by the ecosystem participants together. So how do you think, or what strategies do you think, participants should adopt to tackle this problem?
Prashanth, frankly, very good question. That is a perpetual challenge with any of the regulated entity in the country. Now, we all spoke about cutting cost and speeding up the transaction. Now, as a RE, and a lot of us read these news articles or practically everyday basis. There's so much of money has gone siphoned off. What we don't realize that money got siphoned off via the banking channel, and money has gone abroad. That means, who was at fault? Bank was at fault, regulation was at fault, or the client was at fault. So when the bank is dealing, and I can borrow from what Indunath was mentioning just now, when the bank is doing a transaction, you have two pressures. One is pressure of competition. If I don't do, somebody else will do. Second is the paper has to be correct and timeline has to be met. And the sad part is, a lot of the trade finance part of the country, while digitized, there is no single data like what you have on the lending side as CIBIL is available on trade finance. Wherein I know if a customer is bad with me, then let's say HDFC or ICICI or any fintech player would also know this guy is a bad to deal with. So my bad customer becomes somebody else's customer and then moves to third customer and fourth customer. So when we're dealing with these transactions day in, day out, the challenge is not to say what is the source of money. The challenge is to track what is the destination of the money. When the money is coming in, you know who's the remitter. Simple task. You can check the guy's incidents and see the documentation or see the export part. But the biggest challenge comes in where it's the import part, because most of these guys who are importing from India are not the direct importers. They are the layer between the real importer and the Indian customer. And most of these payments, as you are hearing, the China is a big country. Most of these payments are going to the high-risk countries like Hong Kong, Dubai, Indonesia, which is coming up now, and Singapore. They happens to be largest partner of the country also in a way. So what we try to do in our bank is, any customer who comes in and do a transaction with me, while KYC is all basic aspect, everybody checks it. What the additional we try and do is, we go behind the veil of the customer and see what is the background of the customer in the similar business. Or more like a lending scenario, that what kind of a transaction he does with anybody else. Is his transaction out of the trend or within the trend? I don't know if there's a better scenario to look at it, given there's no singular database available like a civil to do a checks and balances. If something Indunath would have it, I would love to have those things also to figure out how customers can be screened. But frankly, there's no single answer. At least I can give and say, this is the biggest risk and this is the mitigation. It's more by experience and burning your hands.
Just
Sure, I think.
Just a quick point over there. So we recently had a discussion with PCI also on this. And in cross-border payments, see, lot of type of frauds that are happening. Sometimes collusion, sometimes, velocity-based parameters are breached. Or sometimes, the beneficiary in India itself is doing fraud. So we had a detailed discussion with them that there is no single source available. Why can't PCI particularly work on that?
Good idea.
But again, that's where, as in initial 5 or 6 payment aggregator cross-border, they agreed that we will feed the data. That is available in our system. So why don't we create a single source of truth and all participants can access at the time of onboarding the merchant itself? Is there an history? So that acts pretty much like a individual CIBIL scores that we have today.
Very
CRISIL
valid.
scores.
Very valid. In case if a couple of banks more can join this piece, it will clean up the industry per se.
Actually, it is going to help.
Yeah. Let's hope.
Okay, I think we are running short of time. I think we had a good, balance of folks from banks as well as fintech companies in this panel, and hope you had an insightful discussion here. Any questions? Happy to kind of take it up. Yeah.
Hi everyone. Hi everyone. My name is Navtesh, and I am from a fintech called Supra Banking. So my question is about digital inclusion. So with the increasing focus on digital first solutions in cross-border payments, there is a risk that we leave behind the underbanked populations or regions with limited digital infrastructure. So what strategies or innovations do you think fintechs can make or build so as everyone can come together and be a better, I would say, and so that the solutions are accessible to everyone and anyone included? Any of you can answer. Sure.
So I think, so at least from a digitization perspective, I think we look at digitization or financial inclusion in 2 ways. One is including the 100% of the digitally enabled population. So let's look at that portion, and then let's looking at the rest of the non-digitally enabled population at this point in time. If you look at cross-border remittances or cross-border money transfer, over time we have reached a point where we are able to include everybody who's digitally enabled, and that was not so till some years back. A very simple thing which we sort of take for granted is this UPI mechanism. But if UPI was not there, I'll tell you how the transaction looks like. For sending money outside, you need to send money from your bank account to a bank's bank account or a AD's bank account. For that, you need to add a pay. It's RBI reported data that less than 1/5 of the bank account holders on the retail side actually have net banking or mobile banking access, which means they would have to go to a branch, right? So the first leg of actually just inclusive to digitally enabled population, that has been solved completely, is what I would say. Now it's a matter of time to make sure that they're active and they're actively participating in the transactions and so on and so forth. That's a mean of the industry sort of developing, outreaching, marketing, companies sort of activating those and so on and so forth. But that wasn't, like, I think we take it for granted, that wasn't the case till very, very recently. Even receiving money. So for example, a lot of corridors, like the Middle East corridor, we see a lot of inbound coming to economically weaker regions, which is for maintenance of those backgrounds. Now, if that was not UPI enabled, there are severe restrictions on the amount of money you can get in as a cash remittance and so on and so forth, which means they would not be able to even get the money in if they were not digitally savvy. So that has happened. Now, the second part is on inclusion of the non-digital population as such. There, from a cross-border angle at least, the way we are looking at it is, there's a lot of effort happening by the government as a digital infrastructure, right? UPI being offline, UPI going to devices, non-smartphones, and so on and so forth. So the first level of enablement has to happen at the domestic level. Once that enablement happens, then you have a population which is enabled for digitalization on cross-border transfers. And then you follow it up. The reverse might not be a very good idea on day one itself, because you need basic infra to be in place to digitize. Like, you need them to be enabled for UPI transactions. You need them to be enabled for eKYC transactions and so on and so forth. So let that happen first, and then you can sort of go on and digitalize the cross-border payments also for them. That's how we are looking at it.
So maybe just to add to what Girish mentioned. So we look at it in a different manner, and this question came up to me 2 years back in one of the college event, wherein they asked how to go to the deepest tier of the country. Digital piece, as he mentioned, absolutely everybody has the same way. The moment you go to a population which is not digitally enabled, there are a lot of government initiatives which have been taken. There are Grahak Seva Kendras which have been created. Panchayats have been, enabled with internet. And if you look at ITC e-Chopal, that is an initiative wherein they did set up farmer service centers. These are the infrastructure which are already there. It is a matter of time that we start enabling our solution over there. So we have already started working towards the same. Again, for such solution to go live, there is a lot of dependency on the government machinery and government infrastructure, be it India Post, be it Grahak Seva Kendra, which is run by the government. So this is where we at our end as a fintech have created the capability of white label, wherein everything else will remain at the back end with us, but the distribution will lie with them. So that is one of the way that every industry may adapt to.
Thanks. Yeah, thanks for enlightening us with your good knowledge and all. So my question is a little bit different. Like, a lot of fintech players are coming up in market, and banks have the largest wallet in terms of cross-border and all. So when you spoke to any of the exporters, they always come up with, my price is this. So मेरा 20 पैसे चल रहा है, 20 basis point चल रहा है, 30 चल रहा है. Fintech players have always a challenge to make up the margins, since they have a funding round, they have XYZ things to do, and they need to get the margins right in order to sustain the market. So what do you guys think in terms of the pricing disparity between the banks and fintech players, and how to solve for that?
Yeah, rightly said, favorite topic. See, one is, you have to see pricing from a scenario, how it's coming down. As I was mentioning earlier, these same costing, and I'm saying costing because it is a combination of margins, let's say 20 paisa, 30 paisa, and handling charges, because ultimately if you're lodging the bills, you have to pay some money, or you have to pay the courier charges, or you have to pay the Nostro bank charges, core bank charges. So if I see the holistic price, which used to be 2 to 3%, is now down to sub 1. And when I say sub 1, I'm not talking of a customer who's doing a $100,000 or above. For them, the pricing is even lower. Generally, if we see the MSME customer who is doing a remittances of say 25,000 US dollars, for him the costing, if I see our scenario, ballpark he end up paying close to about 50 to 60 paise, which is about 0.7, 0.8 kind of a dollar. Now, so one is this price right or wrong? There is no single answer. But same time, as I mentioned earlier, as we see the volume growing up, see at our bank also last 10, 12 years of journey, we have seen, we are today the 4th largest bank on the remittance volumes. Our pricing on the core bank side have gone to almost 1/3. Our operational cost has gone down dramatically. So the way I see is, As the volume becomes double, as our minister has mentioned some time back, I think these costing will even come down further because of technological advancement and thanks to the pressure built up by some of our fintech peers. If we have to sustain, there is no free lunches for me or for the fintechs. We have to all sustain in this business of tight margins. What we foresee is, of course, margins will come down, especially for the MSME segment, not so much for the large corporates, because large corporates are anyways on a quarter paisa or a half paisa margin. It can't go to zero. So I think earlier 38, 40 paisa was norm when I started my career. Today it is about 10 to 12 paise to a 17, 18 paise. It should come down to a lower levels. And anyways, I think a lot of platforms are coming in now. As a bank, at our bank also, we are tying up with a lot of fintech partners for the last mile connectivity. So you will see these kind of a kind of partnership also coming in. Like we recently did something for the NR customers because while we are very strong on the outward corridor, but we wanted a help on the inward corridor. So for our NR customer 24/7, they can choose the partner they want to deal with. Let's say tomorrow you want to do a remittance into the country. I have an X rate, but you can go to a Y fintech and see the rate, or a Z fintech see a rate. What we try to do is a kind of a singular platform, like a marketplace. You can see all the partners I have, 3, 4 partners, and you can see which partner you would deal with. So that kind of a scenario, if comes in on a B2B transactions, will also bring down the rates. And somebody will take a lead. If it is not us, somebody else. But I see that's a order of the day down the line.
Also, it's also about awareness. As and when you start doing more transactions, you talk to a lot of people, the awareness also goes up. RBI has already come up with a retail FX platform, which is being exposed which RBI is pushing the banks to expose to the customers, which is a very transparent way of doing, and it's an RBI-driven rate, right? So it is all about awareness. It is there. It's all about sending that information into the market, talking to the client, creating them awareness. And RBI is very, very clear, in terms of the cost of doing business. One is ease of doing business, the other is cost of doing business. Has to come down. Although it's there.
Disruption, especially in this cross-border transaction. So I would like you to give your perspective on the global scenario, how it's going to change, okay, which countries are going to adapt it. Of course, United States, if it is going to adapt a cryptocurrency, lots of cryptocurrencies, what will happen? What do you mean? I would like to you to answer in terms of the blockchain-like only digital money-backed cryptocurrencies and money-backed cryptocurrencies, and also the policies that India has to adapt. The RBI was totally against this crypto. Now it's going to change all of that. So how India should adapt and what other countries are going to do. Okay, and then also all the different problems that you're thinking of, like credit. Now all of a sudden that becomes different. What is the margin you're talking about? That becomes different. The trade, finance, all sorts of things now change. I would like you to give me your thoughts on all these things, policies, everything. Thank you.
Okay, so we'll split this question in 2 parts for the ease of me to respond it. One is thought behind the Bitcoin. Ultimately, Bitcoin is nothing but a blockchain product. End of it. So banks or fintechs in the country are adopting blockchain as a process for settlement of the transaction. That is easing transaction only, and I'm sure most of the banks in the country have done some transaction here and there. Yes, adoption is slow because of the arrangement that you need to do and the bit of a slowness of the acceptability of the process in the country also. But I would say blockchain down the line would be the order of the day. RBI may come out with a lot of guidelines around it to ease the flow of transaction or ease the flow of controls. Second part is, you spoke about the charges or the Bitcoin adoption part. Now, that is for the RBI to formulate the policy and processes. The biggest headwind that I see is today it's a dark hole. You really do not know how the money flew from X person to a Z person to a Y person. You don't know. So the biggest pain point in any of this kind of a currency which is available globally is the ownership and the traceability. Today, at least in a banking system or a fintech system, you know the money trail, that who owned it in the process, or money in the motion, so that the due owner and the legality of the money is also ascertained, which is in current scenario not a possibility with the Bitcoin or alikes. Second part, the third part is, you mentioned about US adopting it. See, I really can't comment about what US will do after the change in the presidency, but out there also there are headwinds around the risk factor. You would have seen a lot of cases around the money stolen from the wallets, and millions have got stolen. Now, you would not want to have a global currency or a global system of settlement which is so prone to theft, wherein somebody hacks it and you lose millions of dollars worth of currency. So I think long way to go, but I would say maybe another 2-3 years when the world is much more amenable to such kind of risk and such kind of disruption, wherein you can have a traceability of the legal currency or tender.
Yeah, I think just to add on that, I think from what India has at least done is to track the the traceability issue, mandated all platforms, crypto platforms to register with the FIU-IND, which is India's National Financial Reporting Agency. I think that's the first step to at least acknowledge that that product exists and there's a requirement to really understand and solve for that in the long term.
Yeah, but that is within the Indian show. The moment you go global, I mean, you lose track of it.
So there will be three aspects to it, just to add to it. One is there will be a technical aspect as to who's the rightful owner of that asset, right? As you said, could be hacked and somebody gets that there. Second could be the legal aspect, who's what is the legal framework? Is the legal framework strong enough to ensure that this traceability happens? And third is the liability part of it. Who's ultimately liable to pay for it or ensure it's who owns the liability for if something goes wrong. So there are three aspects which will have to be looked at from a framework perspective before we actually reach to this. And as mentioned that it is RBI to frame the policy. So Vikas really clearly mentioned that within India we all are governed by RBI and its policies, right? From a cross-border perspective, we are still not convertible on the capital account, right? And we still do have a lot of liberalization happen on the current account, but capital account is still not convertible. Internationalization of the rupee is still not happened, so still a lot of time before we really reach there.
And if I can add just one last line on this one, who wants a currency who depreciates by 50-70% because Trump is coming or not coming? Countries can go actually bankrupt if they adopt a Bitcoin. Imagine if India would have bought Bitcoin at $38,000 and now 1 lakh, suddenly your economy is triple or 1/3 or 1/4. So things can go completely off.
So to your question, not getting into detail, for adoption, the first and foremost requirement is the infrastructure, which they have mentioned that blockchain as an infrastructure has huge potential, and there have been tests that have been done. Second, in monetary movement, with respect to percentage, the regulation has to curb whether it is Bitcoin, DAO, Doggy, whatever you call it, whichever currency it is, whether it is CBDC India as in digital rupee or Chinese yuan, digital yuan, it cannot get into a speculative trajectory. And third, the most important thing, a society without an order is chaos. That cannot survive. So the whole premise of these coins was that self-discovery. And there is no owner being there, but eventually they have also created a self-regulatory body, how the complaints and other things will be managed. So that order has to be created. And then again, acceptability is the last thing. UPI, the classic example, the acceptability was public infrastructure being made available for free. Until unless you have a QR code placed on a shop, you can't pay digitally even if you are holding that digital money. So that in that order, things have to go down.